India's third stock exchange, MCX-SX, is fighting to stay afloat. The NSCL scam and the stepping down of the government nominee and its former chairman GK Pillai after that CBI inquiry began against former SEBI officials into the granting of exchange licenses has forced many of MCX-SX institutional investors to stay away from the ongoing rights issue. MCX-SX is also struggling to maintain its net worth above 100 crore rupees, which is the stipulated limit. Can MCX-SX win this battle for survival? Well, joining us today on Closing Bell is Thomas Mathew, the chairman of the Stock Exchange. Also with us, Sajeet, Manghat, Mumbai Bureau Chief at CNBC-TV18, and the man tracking the story very closely. Mr. Mathew, thank you so much for your time. Welcome to Closing Bell. Let me start first by asking you about the response to your rights issue and how crucial this response is in order for this exchange to stay alive. Forget success, just to stay alive. Are you getting enough money? You've downscaled that issue to almost half its size at about 200 crores now.
Yeah.
Are you going to meet that 200 crores?
First of all, let me clarify that rights issue is not the only way we are going to make the capital infusion. Presently, we have started with the capital this rights issue, and we are in touch with all our shareholders, particularly the banks. The response is good. We have time. The funds have started coming in, and with the kind of positive things happening in the banks and our other shareholders, we are hopeful that we will be able to generate the funds required.
You need 200 crores?
Well, as I told you earlier, this is 200 crores is our target for the rights issue, which hopefully we will meet. But beyond that, we have other plan B of preferential placement, strategic investors, mergers, which is on a long term.
Who are you going to preferentially place your stocks with?
That will
with if your own institutional investors, Mr. Mathew, are reluctant to put money into the exchange?
I won't say they are reluctant.
So, but you won't commit to me that you'll meet 200.
Yeah.
So it seems that the response is not enough, good enough for you to believe.
We are hopeful of getting sufficient funds through this rights issue. There is a positive response from our shareholders, and we are in touch with them. Our team is making presentation to them, clarifying whatever they require. And I personally am in touch with all the CMTs and other people in the banks and other shareholders. And we are very hopeful that we'll be
Mr. Mathew, I don't mean to be combative, but since you're a public institution as a stock exchange, you know, I'm asking you questions that I think everybody is interested in knowing about. And that is that how will you stay afloat? Your 100 crore net worth limit seems to be under threat at this point in time. It might seem that you might slip below that. You're talking of preferential issues or strategic investors, but the real truth is that given the shadow of FTIL and Jignesh Shah, which you may have been able to diminish, but given that shadow, it's going to be very tough for you to find investors. Given the other regulatory situations, you know, about voting right caps and all of that, that's the other big burden. And third, you are clearly in a desperate position. Investors will be able to smell that desperation very easily.
See, there is no shadow today. Today, this exchange has been totally ring-fenced. There is no direct linkage on our board for FTIL or MCX. Today, the MCX-SX stock exchange is run by a new board and public interest directors nominated by SEBI. We have a new managing director and CEO. We have new people on the board, and it is being run on a very professional way today, and there is no cloud or shadow of whatever has been happening earlier. During the last 3-4 months, with various efforts the board has generated, we have been able to come out quite a lot. Today the board is working with a very clear agenda, a 5-point action plan with timelines which we are rolling out.
80% of your shareholders are public sector banks.
66% are public sector banks.
And there are other institutions who are...
Absolutely.
And they are not putting in the entire money. And when you say that your exchange is ring-fenced and it's independent of Jignesh Shah or FTIL, then these investors should have come in and put the money. You have extended the date of your rights issue to April 17, and still you're not being able to meet the 200 crores target.
This is a scaled-down target.
See, one thing you have to understand. For the public sector banks and the institutions, putting funds in the right issue, they have to go through a process. It doesn't happen in a jiffy or a day. They have to go to their investment committee. They have to go to their executive committee. They have to go to the board. And for the banks, they have to get the approval for these funds from the RBI also.
All right, Mr. Mathew, we understand the process there. All right, but rights issue, like you said, is one part of the process of raising additional funds. Can you explain to us who you hope to do a preferential allotment to, or who are these strategic investors that you think will come in and invest in the exchange?
I can only say that presently some domestic and international investors have evinced interest in the exchange. Some stock exchanges also have approached us for investment and mergers, etc. But that we will look at only at a later stage. Presently, our focus is on rights issue, and
those are many loaded things you're saying. Firstly, on some investors have evinced interest in buying into your stock exchange, in taking an equity position in your stock exchange. So have you reached out to your existing equity investors to find out how you'd be able to do it? Are some of them planning to exit by selling their stake to new investors? Are you looking at, issuing fresh equity to them? How will it work?
What I have to say is that we want the benefit of the exchange to go to our shareholders. That is why we have come out at a very reasonable valuation.
But so how
Once the rights issue is over, we'll take a call.
No, but what is the process that you have in mind? Will you bring in new investors through a stake?
That's what I'm telling you.
Okay.
Once the rights issue is over, we will be able to know how much funds are there and how long it can see us through. Whether we at all require further funds. Because today we are looking at increasing the volume of the business and increasing the revenue on the one part.
But time is running out for you, Mr. Mathew, because your net worth is at the risk of breaching 100 crores.
As of now, we are very much, there is no threat to the net worth. We have been making a lot of austerity measures and cutting costs and getting through very hard negotiations with our vendors.
So what is the kind of savings you're going to make out of this?
Could you talk us through those austerity measures and
yes, I can tell you. First of all, the austerity measures is in the operations in the exchange. Secondly, reducing the payments to the vendors through negotiations. Software vendors and other vendors. Many of the functions we have taken over already as in-house. So these are some of the austerity measures.
Your biggest cost is the technology cost which you pay to FTI. You pay around 100 crores every year.
Absolutely.
How much
it was.
So how much have you reduced it by?
You say was, as in you've been able to change that relationship?
Absolutely. Already we are, as I told you, we have been in negotiation for quite some time, and we have already got a considerable
how much is that?
Reduction on the. It won't be proper for me to spell out that, but I can only say that we have already got sufficient.
So you've negotiated down the amount of money that you would have to pay to FTI for the software support.
For the software, and
by half.
And we are also looking at new software vendors.
Okay.
See, the technology software can be at any cost. So we have already started some talks and discussions with some other international vendors for the software technology, which is on a very preliminary stage.
But will you be able to exit FTIL software completely, because you have a 30-year or 33-year contract with them, right?
Well, that agreement also we are looking at. The agreement which you are talking about, 33 years, etc., have not been very favorable to us. We are in negotiation and discussion with them on those points also.
So you get an exit from that?
Ultimately, we will be trying for that. We are considering that too. That's why I told you we are in discussion with other vendors also.
It does seem MCX-SX might allow for its equity trading segment to go dormant and focus only on its currency segment in order to reduce costs, losses, and focus on profitability. Can you talk us through that, sir?
Well, I must say that this exchange started predominantly as a currency derivative exchange, and that is our core strength and USP also. So we would like to focus on this currency derivative segment. And as you are aware, recently, of late, the RBI and SEBI has come out with concessions on the margins for the currency derivative exchange. It has come as a big shot in the arm for us. We are the exchange which is going to benefit most out of it. Secondly, we have already taken up with the RBI and SEBI for extension of trade timings, which also is very positively being looked at. This also will help us very much in the currency derivative segment.
That's great, sir, but you're going to allow for your equity trading segment to shut down?
We are not going to shut down. When we are focusing and we want to consolidate on our core area of currency derivative segment, for some time, till we consolidate and get our balance sheet in order, it may be a little dormant, but we are not shutting down at all. By reducing that operation, you must understand that MCX Stock Exchange has earned a lot of expenses. For example, per month we were spending about 4 crores for our alias. 4 crores. For an exchange like this, on one count only spending 4 crores as LES for the equity is a big amount. Now we have saved that totally. When earlier we were discussing about the cost rationalization.
Sir, it gives me the impression that
Yeah.
you're doing this in order to prepare yourself to combine with another exchange?
No.
Is that the truth?
You cannot read between the lines like that. There is no such intention at all. Our present effort is to focus on the currency derivatives, and with the policy reforms that has been happening, restoring that commission margins for the currency, extending the timing, and also if the banks are allowed to trade on their proprietary account also, that also would come in. So there are many positives when we look at the currency derivatives, which is our core area, and we want to focus on that.
What do the letters USE mean to you, sir?
Sorry?
I ask you this, what do the letters USE mean? USE mean. No, USE,
well,
not USB.
Presently, I have...
You're consciously mishearing me.
No.
The reason why I'm bringing it up is because Sajeet informs me that you're in talks with USE. To combine the two exchanges.
As I was mentioning earlier, rights issue is only planning. We have other plans for capital infusion and to see that, ensure that the exchange develops as one of the best exchanges in the country.
How will you
and we are very confident. Therefore, we have other options on the anvil, like the mergers, statistic investors, etc., which, as I told you, we'll look at a later stage.
But what will be the time frame for that? Because if you're looking at a merger with an exchange, what kind of synergies will USE bring in?
Well, I did not mention about ESC. I mentioned about USP only, which is our USP, the currency derivative.
I'm talking of a merger with an exchange. Is that an option?
I get your point. When we are to merge with any exchange for that matter, it is not one exchange that is on the anvil for us. Other exchanges also have evinced interest in the MCX stock exchange, because people know that this is an exchange.
So who are these other exchanges that have evinced interest?
It is too premature and nascent stage to talk about that, but I can only tell you that a merger would bring in lot of synergy, reduction in the cost, increase in the volumes. All this would happen if a merger with an appropriate exchange takes place, whether it is national or regional, and consolidation of net worth also. So this is an option which we would look at a later stage after the rights issue.
That's an option to increase your net worth, basically. That's what you're saying.
Not only net worth, it will increase our volumes, drastically reduce our cost,
bring in technology?
Particularly the technology cost. Particularly we can move on to a lower technology cost platform. So all these synergies would happen if we...
In Q3 you had a loss of 51 crores. What kind of loss reduction has happened in Q4?
Yeah. When you talk about the loss, there are two aspects. One is the revenue and the other is expense. We were having about 18 crores of expenses per month. By drastic austerity measures and cost rationalization, we have been able to save per month 8 to 10 crores every month, out of which one component itself was about 4 crores of LES. And on the other areas, we have got reduction in payments to certain vendors. So we have been able to save quite a lot, and from January onwards, if you have looked at our figures, our business sliding down has stopped and we have been on the ascent. Our currency derivatives segment particularly have performed quite well from the beginning of this calendar year, and it should go through, particularly with these policy reforms that are coming through.
All right, Mr. Mathew, I'm going to have to let that be the last word you tell us, because we're entirely out of time and we'll eat into the next show, which is to start in the next 1 minute. So we'll thank you here on Closing Bell for speaking with us.
I want to mention that this MCX stock exchange is on the right track. The new board is working with a 5-action plan with the timelines, and we are very confident with the robust system and support of our investors and the brokers and the community. This stock exchange will be able to turn around. I know times are tough, but when the tough times are there, tough people do. Tough times do not last long.
All right, Mr. Mathew, Godspeed to you and all the effort that you're taking.